Good morning and welcome to the Centaurus Metals Breakfast. My name is Kerry My name's Kerry Stevenson. We're going to do something a little bit different this morning. Darren Gordon, who's the Managing Director, he's going to talk to you about the Centaurus Metals story. Just give you a quick overview. How many people in this room have never heard the story before? Hands high. Okay, so that's a good thing. So we'll go through and just give you a bit of information about the project, and then we're not doing death by PowerPoint. Darren and I are going to have an interactive discussion about some of the challenges, the opportunities, and what he sees as the future going forward for Centaurus. And then, ladies and gentlemen, we want to make it really interactive. So we want to hear from you, questions you've got. We've got 45 minutes to get through this, lots to do, lots to say. Darren, why don't you take them through it, and then we'll do a bit of a chat. Thank you.
Very good. Thanks everyone for coming along this morning. I know it's always an early start, but hopefully you get your breakfast and you hear a good story, particularly in a space where there's probably not too many companies that can offer what Centaurus can offer. As Kerry alluded to, I'll just try to keep this to like about 10 minutes, maybe even a bit less. Just try to get through the presentation, and then I think it's probably going to be better we just have Q&A, and really I like to address or answer the questions that you guys have rather than the things that I necessarily want to tell you. So, Jaguar as a nickel sulfide project is, in our opinion, in the right place at the right time. It's a large resource, it's licensed, it's got a long production profile, and we're now in the really important phase of getting through the funding. And I think once that funding comes through, then we're going to be able to unlock a huge amount of value. So I'll just touch on some of those points as we go through. I won't talk to the nickel market specifically, but I'm happy to take questions around that nickel market once we actually get into the Q&A. Just quick snapshot on Brazil. Very good jurisdiction to be operating in. You're probably aware there's a bunch of companies here that are in Brazil. I think it's become more prevalent over the last, say, 5 years, where more listed companies, particularly out of Australia and Canada, have gone into Brazil because they've seen the opportunity. It's got great mineral endowment. The system now is really, really well set up to support critical minerals. The government of Brazil is doing an enormous amount of work to try to encourage companies to bring forward critical mineral projects, and we're sort of becoming a bit of a benefactor of that, and it's helping us get through approvals. It's certainly given us access potentially to some funding with the National Development Bank. But one of the things that underwrites, in my opinion, Brazil and our project, and what differentiates us, is our operating costs. And our operating cost is largely driven by having a very low power cost, and that power cost comes about because Brazil's grid is on a hydro system. So you've got very clean power, but you've got very, very low cost power as well, around about 4 cents a kilowatt hour. And just to put that into perspective, I mean, I think Canada probably has hydropower and benefits from low power costs. But from where I come from in Australia, like Australian power costs for mining projects, probably minimum 25 cents a kilowatt hour. So, you know, 4 or 5 times more expensive just on the power alone before you consider the other aspects of the project. So that's a key differentiator for us. And the other thing is where we're located in the Amazon region, the northern part of Brazil, we can avail ourselves to a 15% corporate tax rate. I think I'll get into the people probably a little bit when we go into Q&A. Importantly, Tiago Costa has been appointed as project director. He's a build guy with a huge amount of experience. Built a number of projects in Brazil, Brazilian national, knows all the ins and outs, and we feel very fortunate to have him as part of the team. I think where we're located is critically important. This region is the Carajás Mineral Province. It is a prolific mineral belt in Brazil. It is dominated by Vale, but that's a good thing. They've been there for about 40 years. They've invested a huge amount in infrastructure. They've got some of the biggest projects in the world here. And with that, we can piggyback off that and really leverage that opportunity. So middle of screen, Salobo, biggest copper project in Brazil, IOCG, probably second biggest IOCG deposit behind Olympic Dam in Australia. Middle of screen, S11D, largest iron ore mine as a single mine, producing 90 million tonnes of high-grade iron ore, 65-66% iron ore. Over to the west where we are, Onça Puma is a 40,000 tonne ferronickel operation of Vale. We're about 15 kilometres from that. That has already got high voltage power running out to there, a 230 kV line, which we'll spur into and be able to, I guess, charge up our project doing that. Bottom left of screen, Bow Speranza, what's now known as the Tucumã project owned by Aero Copper. That is the project that Tiago Costa built. He built that a 4 million tonne copper float plant for about $350 million US, did it in about 22 months. So we've said to him, go and rinse and repeat, let's do the same thing. Anything you didn't quite get right last time, we'll correct and we'll get an even better project. But basically it's the same project, just a different commodity. Let's go with that. So I think the things to talk to here, licensing, scale, costs. They are the things that make a big difference for us. So Jaguar is licensed. We could build on this project tomorrow once we're funded. We've got the mining lease late last year. We've got the environmental licenses in place, and you would have heard others talk around their environmental licensing process that are operating in Brazil. Got to go through the environmental impact assessment, do all the work, collect the data. We've done all of that years ago. Bruno, who's here, has led the charge in relation to that. We were awarded the preliminary licence in 2024, and then in 2025 we've received the installation licence. We've got that for the project and for the power line. So that's tick, that's been done. Resource-wise, it's a large resource. It competes with some of the best nickel sulphide projects globally. It's got a combination of size and scale. So 1.2 million tonnes contain nickel. There's not many projects like that. The only deposit I consider in the same category as Jaguar is Kabanga in Tanzania. But I would take Brazil in a heartbeat of trying to develop and operate a project as opposed to trying to do that in Tanzania. Just my opinion, but obviously a little bit biased, but I think that there'll be enough people that can validate that for you. A large portion of that resource is in measured and indicated already. We've converted that to reserves. We've done economic studies now. There's 400,000 tonnes in the reserve, which supports our 15-year open pit mine life. There is further resource that will be converted in the future in the underground environment, but it's still giving us a very long life project. The flow sheet is a very simple float circuit, nothing complicated about it. It is one of the advantages of having a nickel sulphide project over a laterite project. You don't have the complex chemistry, you don't have to build a high pressure acid leach circuit with big autoclaves. So from a capital intensity point of view, it's a very, very good way to produce nickel. One of the things we do is produce a very high grade nickel, and that's advantageous to us, so I won't go into all that detail just yet. Costs, we're about $4.40 a pound, all-in sustaining cost, puts us at the bottom end of the cost curve. That's extremely important for a whole bunch of reasons, but as we've gone through the process of getting offtake, demonstrating that we will be at that bottom end of the cost curve, that will always be in the market, that will be a regular supplier. So you can have a long life project and you can have plenty of size and scale, but unless you are low cost and you can supply consistently over time, it's difficult to get away the offtakes. And I think we've now been validated because we've got Glencore in as an offtake partner, and we're working on some other offtakes now. That's where we sit relative to where nickel price has been over the last 20 years. So it just gives you more confidence of where we will be and that we will always be in the market. That's the production profile. Will be around about 22,500 tonnes of nickel a year for the first 7 or 8 years. That will generate some pretty significant cash for us. There is some underground opportunity there, so you can see the pits. They run over about 3 kilometres of strike extent on site. Underneath that, there's probably 300,000 tonnes in the resource. Of that, there's probably about 200,000 tonnes which we could see, that could come out as a reserve, and we've done a little bit of work just to try to demonstrate what that looks like. So in the future, that additional mineralisation will come into the process. We'll probably go from 15 years to 25 years once we get going. Now the cash flows. Funding-wise, we'll talk a little bit about this as we get into the conversation, but the debt process is running, equity process funding, it's really the last piece of the puzzle. We're looking to make investment decision towards the end of September, so there's a lot of moving parts right now, but feeling very confident about it. And we're about probably a 2-year build once we get into it. So as I said, Tiago built this other project in 22 months, on time, on budget, so we're looking for him to do it all over again. jump into Q&A, I reckon.
Okay. All right, Darren, come and join me.
Okay.
Now, I said before, this is very interactive, so if you want to ask a question of Darren, please put your hand up and I'll come and charge across to you and have that conversation. Before we get into specifics about the project, talk to us about the nickel market, because I remember Rick talking at this conference probably a couple of years ago now, saying he was very keen on nickel, and he continues to say it because it's been in the doldrums for a little while.
Absolutely. Yeah, no, it's been tough.
It has been tough. So your views on where it's going, because we all need nickel, but why?
Look, I think when we first bought this project back in 2019, bought it off Vale, the critical minerals, battery, EV concepts hadn't even started to take off. We got a good lift in that, and then Indonesia decided they would come into the market. So all of a sudden there's been this wave of supply, and there is a lot of lateritic nickel in Indonesia, and like all markets, cobalt's like that. Eventually these surpluses, everyone works out it's too much, price is too low, we've got to do something to correct that. And so we've seen more recently Indonesia make some moves to reduce the supply against a backdrop where you've still got relatively good demand coming from stainless steel and also battery EVs. So that demand is there. It's probably growing 5-6% compound annual growth rates on the demand side, but then we've seen Indonesia really pull back on the supply side. They've made it more difficult to mine. They've got quotas in place. They've got a new ore price regime, which means that costs are higher. You've had Iran kick in, which is causing sulphur prices to go high, and that's made HPAL, high pressure acid leach circuits, a lot more expensive. So again, they've curtailed production. So we had this little swing through the last few months where it sort of popped back up to $18,000-$19,000 a tonne. And then in my opinion, what's happened now is you've just seen inventories kick in, and people are just drawing down on inventories right now, and we've pulled back to sort of around the $16,000 a tonne. But I think those inventories get consumed, the price moves back up. Indonesia has publicly stated that they want a price around this $18,000-$19,000 a tonne because they generate most of their revenue for their budget out of the royalties from commodities like alumina and nickel and the like. So we think that with having 65% of the market, they can control the way the price goes. It's not an exact science, but they do have the ability. They've got a bit of power these days. So yeah. So look, I think the nickel has been a tough environment, but these sort of projects have I guess had the ability to keep doing the work, get through the licensing, bring them all forward, because we knew that it'd always be cost competitive with Indonesia.
Speaking of that cost, does that impact, specific to the Jaguar project, if the nickel price is sort of 15, 16 or 18, 20, does that make a difference to your project? Of course it does, but how much of an impact does it have?
Oh, look, it's mainly a sentiment-driven thing. So, with those costs, that's equivalent to about $10,000 a tonne. So you've got to fund your capital and pay all of that back, et cetera, et cetera. What we really want is an environment where the sentiment is strong. And so we've seen for the first 6 months of this year that sentiment completely changed to nickel. People were investing in it. Banks have shown more interest. Off-takers have shown more interest. All of those things are extremely positive for our project. I don't think that's diminished now. I think people can see through the current market. So, we still feel like that upward trajectory is there. But sentiment is probably the main differentiator between a $16,000 a tonne and $18,000 a tonne, in addition to the additional profit we make.
Okay. Questions from the floor? Yep. Thanks, Alex.
Can you talk a little bit about those off-takers and debt and equity as a combination of three sources of finance which you'll have to put in place in order to get some production happening?
Yeah, no problem, Alex. Look, I think if I go back again to the end of last year, you go away through Christmas holidays and all of a sudden, you're still at $15,000 a tonne and everyone's slow about how they're doing things. Roll forward even a couple of weeks, Indonesia makes some moves, all of a sudden the price moves, off-takers get interested. They're always interested, but they're then able to move. Banks are the same. So I'll try to touch on each aspect of that. So the off-takers, Glencore, we entered into an arrangement with them in, I think it was about February, and for about a third of our annual production over the first 5 years. That's a contract that it's a market-based contract. It doesn't have a floor price. You know, some of these other commodities like rare earths are trying to get floor prices into their contracts. Nickel's not like that, copper's not like that. You're really just playing with the market. But what you get is a pricing structure that it's based on LME prices. You've got a scale, there's different payabilities associated with that scale. But so that contract for us was extremely important because it was Glencore, but it was Glencore as principal taking it into their Sudbury operations, their smelter in Sudbury. It wasn't them taking it as trading volume, I'm going to put it there. So for us, it really validated the fact that Jaguar product was going to be part of a blend of a smelter from beginning of 2029. And so that's really been a big step. And then all of a sudden after that, everyone's gone, what does Glencore know that we don't know? Yeah. It's like all of a sudden that move is gone. And so we're having a bunch of other conversations. So obviously can't get into all of those, but there's other offtake conversations going. What we will be looking to try to do with that other offtake is use it as a means to get some strategic equity. So to actually bring and help participate in the funding of the project. Because we think that that's a great signal to the market that you get alignment between your off-taker and then where your equity is coming from. The off-take with Glencore, whilst it wasn't directly correlated to the debt guys definitely saw that as an advantage. So then we got our non-binding term sheets in relation to debt. We had, I think, about 10, 11 proposals come in, number of them over $250 million US dollars, up to $300 million US dollars. And I think that those debt guys, in my opinion, probably had used a higher price deck for nickel than what I was expecting them to. So we were thinking probably around that 250 would be sort of the top level, but it's actually proven to be stronger because they are using a higher look-through price. So my feeling was they'd use, because banks very conservative, they'll say, oh yeah, we'll use $16,000 or $16,500 a tonne. I think most of them have used somewhere between $17,000 and $18,000 a tonne as their price deck for long-term nickel prices, which again I think is constructive to where people see the industry going. So all of those processes on the debt are now running. We've got ITEs, independent technical experts appointed, which support what the debt financiers need to do. They're running their processes. They've been to site, done all that stuff. They'll run through to a point in time where we're looking to get credit-approved term sheets in the back end of September. And I've got no reason at this point to believe that they're not coming through at the levels that we already see. So then you can think about that coming out of the capital costs of the project. And then that leaves the equity. So then the equity, we've got to either look at obviously corporate equity or we look at it at a project level. And both options are still open to us at the moment. We've got parties that are looking at it from both sides. So that's sort of a broad snapshot of that. I don't know whether you've got any other follow-up to that, but
he does.
I can see his brain's ticking over.
I can tell he does.
Just with respect to the offtake, so if I've understood correctly, though, that capital won't happen until you're selling something. So
No, that's all intended. So that we would look to take strategic equity at the time of entering into the offtake agreement. That's the plan. I've still got to execute on that, but that's what we'll be looking at. So that in the short to medium, like short term, basically.
So that's equity financing, but not from the market generally. It's from a strategic partner.
Correct.
Right.
Other questions? Yep. Don't think you and I are going to have a conversation.
That's all right.
Which is good.
Back to the sentiment theme. How would you say the world recession could impact the company?
Yeah, and I think obviously if you've got a global recession, it's really growth rates and what does that mean? Stainless steel. So stainless steel is the principal driver, but I think there's a little bit of so the best way to describe it, it's still a little bit niche in effect with this project. So you could have a global recession, that's going to impact everything. Like, don't get me wrong, that'll be everything. But then I think what ends up coming in is projects like this, provided we're already funded, I think we'll be in really good position because we've got, as a nickel sulfide concentrate, we can say, if we want to, okay, this material can go into the stainless sector or it can go to the battery sector. So we've got flexibility. We're not a nickel pig iron or a ferronickel that's got to go just into stainless. We don't have the cost of converting a nickel pig iron into a matte, which has cost, can then go into class 1. We've actually, from where we sit today, we can go both pathways. So yeah, you can't rule out that it has some impact, but again, I think it probably comes back to the sentiment side of things as more than anything. So that's why you want to try to get through all of this funding side of things in the first instance, get that out of the way, because I know the project will be okay. Like the costs of the project say that once we're operational, we're good. It's really the sentiment of actually getting to the starting line.
Other question? Yep.
I'm very excited about Centaurus. Can you explain the risks that could happen during the development phase that could delay the time to production?
Yeah, look, I mean, we obviously...
It's mining.
Yeah, we obviously plan for that. Once we've got the funding, we've got a really good plan of how to execute it, and we've got a guy who's actually done it before in that same general vicinity. So probably weather events can slow you down. You've got a wet season in Brazil that's 3 or 4 months long from January to April. If you've got a really wet season, a heavy wet season, that might slow you down. But those are the things that we're actually already planning for, like the scheduling of when we're starting work, that's already been allowed for. There really shouldn't be any reason that slows the project down once you're actually in the build mode. Tiago and his team have got a good plan of how they want to execute. As I said, having done it before in that same general vicinity is an exceptional advantage to us because we know what the pitfalls are and we can already plan for them. To me, it's really getting in maybe long leads. But again, we're doing the planning work for that, Andrew, where we say, okay, once we make investment decision, we can order those long leads and we know what that lead time is. That's when they'll be coming to site. But if there was some hold up off site, your ball mill or your sag mill or whatever there's going to be constructed, takes a little bit longer than what it says, that may affect schedule. But they're quite micro in the scheme of the overall delivery of the project.
Okay, so I'm going to continue asking questions, but I keep looking out to you guys as well. We're coming up to final investment decision. Is that Q3 of this year?
Yeah, looking at the end of Q3. Look, there's a lot of things that have got to be done to get to that point.
And that's what I wanted to ask you. Talk to us about what you're doing towards that final investment decision, because it sounds like you're very confident this is going to be a mine, but we're not quite there yet.
No, we're not quite there yet. So the timeline is really driven by the debt guys finishing their work. Because what we will plan to do is once we've got the credit approval on the debt, we can then complete the last piece of the equity.
Yep.
So all of those things get tied together relative to when the debt is getting completed. Those guys... And
sorry to interrupt you, but when do you expect that to happen?
Yeah, so the credit approved term sheet should be the back end of September.
Okay.
So I think there's a date in the schedule, I think it's somewhere around the 20th or something, but I'm not working 2 days, there's a window there. The back end of September is really when we see the banks being in a position to be able to say, yep, here you go. And for our board, the credit approval is enough. So don't get me wrong, on end of September, we're not going to have $300 million in the bank from the debt financiers. There'll be, you're papering it all up and they'll ask you to spend your equity capital first. And so you'll only be drawing down on the debt sometime in 2027. But as far as making the investment decision, the board will have enough confidence on the back of credit approval from the banks.
Question at the back, but while I go towards the back, can you just talk to us a little bit as well, Darren, about the infrastructure, some of the, getting this up and running, power, water, etc. Any challenges there?
Look, there's always just the operational challenges that goes with infrastructure, but I guess reiterate that being in this part of the world is a big advantage. Vale have been there 40 years. I can point things out here. You've got You've got a town here at Pebbles, which is 250,000 people. There's a whole bunch of mining service providers there. You can fly in a 737 jet into Carrigas airstrip. There's two commercial flights a day going in there, plus a bunch of other Vale private flights. You can see the scale of the projects. This is the rail line that takes the iron ore and the copper concentrates out to the coast for Vale. High voltage power up to 500 kV. In our situation, 230 kV line that runs, so in this box is here. This is the existing power line. We're going to spur off here and run around. This is a big iron ore ridge through here. We'll run around to the other side of that. So that's all been allowed for in our capital cost. So yeah, look, Vale is spending about another $12 billion in what they call the Nova Carrigas program, principally on iron ore and copper, but that is all really tied into additional infrastructure supporting this region and actually making it even more prolific than what it already is.
Thank you.
I had two questions. They're short, but are there any elements that are kind of traveling along the project that are hidden, that are maybe like tungsten, niobium, copper, that are kind of like pocket trump cards that are kind of carrying along the project besides just nickel that are interesting? And then the other is you deal with a lot of currencies. You pay your workers in the real, and then you've got your stock exchange currency, and then you're trading in dollars. Does that part add a complexity or any kind of risk, or it's just business as usual for the currencies?
Yeah, I mean, look, we've been operating in Brazil now for over 18 years. So the currency side of it's pretty good. We've got cash sitting in BRL in Brazil. The good thing with that is that most of our operating costs are in local currency. That's one of those really nice advantages of Brazil. Part of the reason why we are low cost in USD is that we can source most things locally, all in BRL, and we get that conversion factor. Combine that with the size and scale. So yeah, really not concerned with that. Yeah, we'll need to manage the FX risk between the debt on the USD and into the BRL, but that's just normal course of business. As far as byproduct credits, we have a little bit of copper and a little bit of cobalt, but it's not a traditional nickel project. You know, if you've got a big intrusive, you might have 60% nickel, 40% copper. You might have a bit of cobalt. Some projects, if they're magmatic, will have PGE credits. We don't have that. This is a hydrothermal nickel deposit, so it's like these, like a Salobo, an IOCG, but instead of having copper gold drop out, it's had nickel drop out. So there's a little bit of cobalt, a little bit of copper, which we would expect that we will get paid some of the months when we deliver. Sometimes we'll be below threshold in those contracts. But just to put that into scale, total revenue is about $4.5 billion US on this project, and there's probably $50 million of byproduct revenue. So it's not, so we don't think about it like that. We really can just focus on the nickel side of things. Yeah, and look, don't get me wrong, some of these smelters really do like having byproduct credits because it helps them keep their costs down. But we're working on the basis that we've got a really high-grade concentrate that they can't source anywhere else in the globe. A 30% concentrate doesn't exist in the market right now, and that's, again, getting into a bit technical stuff, but it's because our nickel sulfide is a millerite rather than a pentlandite. Most deposits globally will be pentlandite. The maximum nickel tenor there in a pentlandite is maybe around 30%. In millerite, it's about 62 or 63%. So once we suppress all the other sulfides, the pyrite, sphalerite, which you're floating off your nickel, and that's going to deliver a very high-grade concentrate. So there's some advantages to the smelters of actually receiving that. So we get an advantage in the logistics, so we only need to move 65, 70,000 tonnes of concentrate a year. So shipping and trucking and everything, getting it to the market. But even somewhere like Sudbury and Glencore, I deliver it to Trois-Rivières Port in Canada, and they've still got a 1,500 kilometre rail haul to get to Sudbury. So for them, having high-grade concentrates, and they get a logistics advantage as well. So those are the sort of things that play into the competitiveness of our nickel con.
Okay, as I walk over to you, 20 million in the bank at the moment, Darren. Got the current project. Are you spending any of that on exploration and having a look at what how to expand the project?
Yeah, so look, we're not spending a lot on other exploration at the moment. We've got a copper project up here, Boinovo, close to Parapebas. We're not drilling that at the present point in time, not because we don't want to, it's just we're doing the other sort of early stage works. So we've been doing soils, we've been doing fixed loop EM. So again, those things are being done with an exploration team, but relatively low cost. We are very mindful that Jaguar is the first and foremost, and so it's this balancing act between most dollars going into Jaguar, but at heart we are an exploration company. So we do want to drill holes, but we've got to do it in a balanced way. So I think we'll still drill Boinova probably after we've made investment decision, but it's still a good project to want to do exploration on, but it's quite limited right now.
Get Jaguar done first. Gentleman here.
Yeah, you mentioned about a third of your resources in reserve. So could you just talk a little bit about how, if you're able to add to the open pit portion of that and to extend the mine life of the open pit specifically? Is there potential for that?
There's a second half coming.
Okay, sorry.
Yes, the second question is separate, just if you're considering a spin out for the iron project. Thank you.
Yep, so I'll just open up this other map so you can see. Go back to this one. So the open pits here sort of extend over about 3 kilometres of strike. What I would say as far as open pit goes, if you saw nickel prices rip to, plus $20,000 a tonne, in some respects I don't want it going too high, it brings a whole bunch of other people in the market and brings it all back. Anyway, these pits would all probably join up. So all of a sudden you'd be able to do cutbacks, your cut-off grade would come down a little bit, your pits probably get bigger. Top north east corner of the tenement, there's a resource up there. Bottom southeast corner, there's a resource down there that is sitting in resources but not in reserves at the moment. Again, they might have 20,000 tonnes of nickel, 30,000 tonnes of nickel, so 1 year's production sort of thing if you go there. So there's pieces to that, but really the growth is going to come from the underground. So as I said yesterday, I don't think I've said it today, but when we drill Jaguar, and in 2022 we had 15 drill rigs going here, diamond rigs. So here we've hit mineralisation as close as 5 metres from surface, fresh sulphides 5 metres from surface. But then up here at Onça Preta, we've hit mineralisation as deep as 1,000 metres deep. So these are like east-west running zones, but vertical, sub-vertical zones. And in particular at Onça Preta, it's very consistent. So the pit is like this just because of economics. So eventually it just makes sense to go underground. It's a lot more cost effective to take that additional metal from the underground. And this is really the other area where we think that we'll have underground. And so of that, as I said, there's 230 in the measured and indicated at the moment. We've done some work, very internal, high-level open stope sort of stuff that sort of says, oh yeah, there's probably about 200,000 tonnes of metal that could come out of that. But that's only going down to probably about 600 metres, so it doesn't factor in 600 to 1,000 metres because most of that resource category is probably in the inferred and you can't bring that forward. So, at some point in time we'll do more drilling. You're not going to drill all of that out from surface. You'll be putting in underground declines and doing that drilling at a later point. But we've got so much mineralisation at the moment that we don't need to rush to do all of that and spend money drilling to try to prove all of that up.
Okay, other questions? If not, I'm going to keep going. Darren, there are nickel projects and there are nickel projects. This is an investor audience. Give us the investment case, if you like, of what makes this project better than other projects that are out there around the world. I know Brazil as a jurisdiction, great place to be. We've spoken a lot about that. But let's talk grade, let's talk size, let's talk opportunity, if you like, from an investor point of view. What makes this better than others?
Yeah, so look, I think as far as nickel sulphides go, I've spoken to this before where the capital intensity to build a nickel sulphide project to produce 20,000 nickel 20,000 tonnes of nickel is a lot less than if I had a laterite project and I was trying to produce 20,000 tonnes of nickel. We're probably talking order of magnitude of 2.5 times at least. So the Chinese do HPAL circuits particularly well now in Indonesia. They might be building those for $1 billion, $1.5 billion for about that same sort of production profile. We're talking around 400 million USD for a sulfide project because the complexity in the circuit is just not there. The other thing here is this is just a mud map of all of the sulfide projects globally. So you'll have very large deposits that are very low grade. And then you'll have underground high grade deposits, a la the things that are in Kambalda in Western Australia that are all on care and maintenance because their costs are too high, but the grade is there. We've got this combination where we've got a very large resource base, but we've also got a pretty decent grade that's sitting in here or pushing up towards these, what I call the world-class belts, Voisey's Bay, Thompson's Belt, Sudbury, Norilsk, Jinchuan. Those are the names in nickel sulfide that have been around for 30 or 40 years. So, as I said, Kabanga is a great deposit, so I'm certainly not discounting that as a deposit, but if you're looking to mount the investment case, you've got to overlay on top of that the fact that we're in Brazil. And I think that has huge advantages, again, to what I said earlier, is that the Brazil government is doing an enormous amount to foster critical minerals in country. And it's really played out over the last 3 years, and there's just a lot of emphasis going into that. So I think, for us operating in Brazil for as long as we've had, we know the ins and the outs, but overlay that with what the government is now trying to do towards critical minerals, and I think we're in a fantastic position to develop this asset. Pull all that back, it's cost.
Yeah.
And keep coming back to it. Operating cost is critically important. Why have we got low operating costs? Size and scale helps. The BRL, the fact that we're doing most of this work in BRL and converting to US dollars, but it's the power. It's like, to have 4 to 5 cents kilowatt hour power, that just makes a big difference. And you could go to any large scale project in Brazil, doesn't matter on the commodity, if they're accessing power off the grid that's coming at those sort of rates, you're finding that they'll be the bottom end of the cost curve. And so that to me is one of the reasons you look at projects in Brazil.
Okay, I'm taking up time, but I want to see if there's anyone else with a question out there. Yes? Oh, got two. Thanks, Huggy.
It's coming from hydro sources. So you've got big hydro dams there, same as like Canada. So you've got that advantage. So there is a lot of rainfall, the dams fill up, generates the power, you're in pretty good shape. And that's the national grid. So you might have a dam down in the south of the country, but it's still generating power over the whole country. And they're huge, they're seriously huge. Hagen?
So I'm already a shareholder, as Darren knows, and have been. It's one of my highest conviction holdings that I have, I think so. And it's interesting how I got there in terms of understanding, what was important for me and what was important for me in making that decision. And I guess there's three things. There's the management team, which people like Darren and Bruno, incredibly experienced and informed about operating mines in Brazil, and have been very generous in their time that they spend with shareholders, with questions and bringing us up to speed. The other part, of course, is the quality of the deposit, and it's an amazing deposit. The nickel that's produced from there, and in that very low cost quartile. So it's a tier 1 deposit in the lowest cost quartile, and the jurisdiction is pro-mining. So they're the three things that for me were drivers in making this one of my largest holdings. I think what a lot of people miss when we talk about the price of nickel is that they see the volatility in nickel, and they're not across how how low cost the Jaguar project is in producing nickel. So they see nickel go down, let's say $2,000 a tonne from $18,000 to $16,000 a tonne, and they think, well, is it done? Well, yeah. No, we're far from that. And I guess Darren, just sort of like for the audience, understanding how lower cost this project actually is in terms of, let's say, cash cost per tonne, yeah. And how that compares to sulfide mines in WA, which I guess need a $19,000.
Yeah.
Yep.
Thanks, Hagan. Look, I touched upon it earlier. Indonesia wants a price $18,000 to $19,000 a tonne. That's what they've publicly stated. For them, that gives them good royalty revenue, but it doesn't allow Australian projects, the deeper underground ones, even if they've got high grade, to come back on, because I think those projects probably need in the order of $22,000 a tonne for a sustained period to be thinking about opening up their mine again. Our all-in sustaining costs, and I know I flip between pounds and tonnes, but $4.43 a pound, you can directly compare that to London Metal Exchange price, and right now we're like $7.30, $7.40 a pound. That is our margin. So, that's today. Like, if we get back up to, $19,000 a tonne, we're adding another $1.20, $1.30, $1.40 per pound of nickel to our margin. So, we're going to be cost competitive, bring it back to tonnes, because I don't know what each person is using, but at $10,000 a tonne, like, we can still survive. Okay, we're not making a hell of a lot of money, but if it's at $10,000 a tonne, there's no one producing nickel. Like, we will be the last man standing, and I've shown that in those charts before. So that is the key differentiator in my mind, is those operating costs put us in an extremely good position. The only ones that in that cost curve that are lower is Norilsk, which again has got limited capacity to supply, because that's got PGE credits in it. So they're a very large nickel mine, but they've got enormous PGEs. And this other big block in here, this is Jinchuan in China. So again, been around a long time, large scale mine. They're putting 1.8 million tonnes of concentrate into their smelters in China. Like, that's the scale of what they're talking about. So we're in a very good position. We can compete. I think that is a very key point of differentiation. So, thanks, Hagen.
Okay. Well, can I get? Sorry. Yeah.
Thank you. This is a geopolitical question. We live in an environment of weaponization of commodities. Operating in a BRICS country, do you think we could get caught into the crossfire?
I think Brazil's a great place to be.
I actually think we have a benefit of neutrality to a certain extent. We get to pick and choose. So Brazil, yes, BRIC economy, and there is an affiliation to be able to align with China if it wants to, but it can equally align with the Western part of the market as well. So, right now you've got a left-leaning government in Brazil, and you've got a US government that's very right-leaning. So, okay, there's points of differences, but there's still, that Western world still needs critical minerals, and Brazil is a fantastic source for that. So I think Brazil's starting to know that it can flex its muscle a little bit. And I think for us, it's the fact that we've got both options available to us. So I don't think it says, you're a BRIC economy, you've got that alignment. I think they're managing to sort of keep both sides of it open.
Hagen, I'm going to come to you because I saw you put your hand up. So this is definitely the last question, though.
Just want to touch base on the iron ore opportunity as well at Jambreiro.
Sure. Yeah, look, we didn't really talk about it today, but Jambreiro was the project that we first went to Brazil on. We bought it, drilled it, licensed it, we started to build it, and then in 2013-14 we got hit by iron ore prices, the majors sending it down to $30 or $40 a tonne. So we parked that project for a period of time. We're going through a relicensing of that now. We're thinking about that as a little bit different in that it's a DR pellet feed project now. The majors, Anglo, Vale, all those are looking more and more at DR pellet feed material so that they can use it to go into electric arc furnaces in the Middle East, all over the globe, because they have a much greener footprint. So there's a pathway there. There's an asset that's, in my opinion, that's got value, but we've got to do a couple of things to unlock it. And I think one day shareholders will wake up and go, okay, there's another asset there that actually is worth a lot of money. Like, the cost to build it would probably be $50-60 million US. It's not significant, but we want to get off-take for it. We want to get it relicensed. And I think the question before about potentially spin-outs, that is also possible for for the iron ore at some point in time. We've just got to find the right drivers to make those sort of calls. So it's an asset that we think that we can still extract good value for shareholders from.
Okay, in the interest of time, I'm sorry, could you please thank Darren Gordon from Centaurus?